Well, the Reserve Bank has now increased interest rates by another 25 basis points. That takes the cash rate to a decade high of 3.6%, the 10th consecutive hike since the central bank started lifting rates from a record low of 0.1% last May. That happened today. This will add about $95 to the monthly payment on a $600,000 mortgage, bringing the total increase in mortgage payments to $1,200 a month. Now, where do people get that money from when their wage remains the same? Even their ANZ Bank Chief Executive Shane Elliott is saying this increase will hit borrowers, quote, much harder as many reach a tipping point on these increased repayments. Now, there is, of course, an answer to this. But when you've got a treasurer on training wheels and a prime minister who at the beginning of the election didn't know the cash rate or the unemployment rate, why wouldn't they be dumbstruck about an answer to this mortgage stress? Make no mistake, millions of Australians are in a mess. A record number of people are turning to Lifeline Australia for support with financial stress and homelessness. Calls to Lifeline relating to financial issues and homelessness were up by 49% between August 2022 and January 2023. A Lifeline financial counsellor said the demand for financial crisis support is unlike anything she's seen before. And she said, quote, people aren't ashamed to talk about financial difficulties anymore because everyone has them. The Lifeline number is 13 11 14. Make sure you ring them. Don't do anything silly. They are available 24/7 to anyone who's struggling, 13 11 14. But why hasn't the bloke with a high opinion of himself, but with very limited reasons for such an opinion, the Treasurer Chalmers, why doesn't he, when he talks about reform, instead of turning himself inside out on superannuation stupidity, why doesn't he suggest an answer to this mortgage stress, which is also cost of living stress? The problem with 10 increases is that individuals have rising mortgage commitments. Now, America doesn't have this problem. Most of their home mortgages are arranged on long-term fixed interest rates. In other words, a house is a long-term asset. Finance it with long-term funding, that is 20 years. That removes the stress to property owners. The interest rate's fixed for 20 years. When owning a home, of course, is one of the real goals of an Australian family. But mortgage increases add enormously to inflation. So, to finance a long-term asset like a home with long-term funding mightn't suit the banks or their shareholders making billions of dollars of profit, but it would relieve the pressure on mortgagees. It would remove the inflation consequences of the escalation in mortgage repayments. So there you are, Dr. Chalmers. Instruct the banks to arrange long-term fixed rate funding for the mortgage market in Australia. And wouldn't this make life better for everyone? The people with mortgages, the banks with less mortgage risk, and the property market isn't affected by the ups and downs of inflation movements. My viewers understand this, Brian in particular, but Dr. Chalmers doesn't, and Prime Minister Albanese isn't likely to find out as he heads off to India and will be present at the first day of the fourth cricket test on Thursday at the gigantic Ahmedabad Stadium, capacity 130,000. Albo, the problems are at home, my friend, and they're mounting. If we could have Zoom meetings during coronavirus, you can have a Zoom meeting with the Indian Prime Minister Modi and get back to work. Put Bowen in his place as he continues to ramp up energy costs and tell Chalmers to do something about mortgage stress. Long-term assets to be financed with long-term funding. Too difficult, they say. Or have they not even thought of it? Or do they lack the nous and the will to attack the real problem?